Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and support you in your self-employment by helping you to navigate the tax system as it applies to you. So today we're going to talk about work in progress and what it is and how to account for it. Before we do that, if I could please ask, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you can easily refer back to this information should you need to, as well as being able to navigate to a whole host of other information that we have, all aimed at supporting you in your self-employment. If you go to the playlist section of our YouTube channel, then you will be able to find all of the information loosely catalogued into topics to help you to find the information that is most relevant to you. If you have any questions, please do feel free to leave comments on the videos, and then we will endeavour to reply or to produce new information as we know what topics people need help with. So back then to work in progress. What is work in progress and how do we account for it? So if we think, as we do quite often, of our end aim, when we come to the end of a financial period, regardless of whether we're trading as a sole trader or a micro entity, we are aiming to have a profit and loss to accurately calculate our tax liability for the period. And that profit and loss loosely is going to be made up of the sales and the income, less the expenditure and the costs that have been incurred. So if you imagine, if you are working on a big project, perhaps if you were a builder, for example, and you're working on a project that's going to take a month to complete, and let's imagine that your period ends on the 31st of March, and you started that job in March and you finish it in the middle of April. So half of the work fell within the March period, the 31st of March year-end period, and half of it actually went into the next year. And let's imagine that you invoice your customer once at the end of the project. Now, as we go on to explain, you will understand that if you, say, for example, invoiced your customer on a weekly basis, that it would not be relevant. You wouldn't have any work in progress. So at the 31st of March, you've perhaps even bought all of the materials for the job by this point, and therefore, if you didn't do anything to adjust, you would have the costs for that job in the 31st of March year end, but the sales would go into the next year. So therefore, disproportionately, we would have reduced profit in the first period and increased profit in the second period. And as I said at the start, what we're aiming to do is we're aiming to have both the sales and the cost of those sales and the expenses that have been incurred in generating those sales in the same year. So what we would do in this scenario is we would say, actually, we've got work in progress. So to the end of March, we'd done half of the work. We've bought half of the materials, and so we're going to account for that income. We're going to move that income into the 31st of March year end. So let's say, for example, nice and simple, that each week you buy the materials that you need for that week. So by the end of March, you've bought all of the materials that you actually used to the end of March, none that for the job into the next year, because you're buying them weekly. But that invoice for your customer is all going to be generated in the middle of April when you finish. So then what we say is, okay, well, nice and straightforward in this example, designed to be so. We're going to split that income in half. Net income, if you're VAT registered, and we're going to say, actually, that work was £4,000, the net sale. So actually 2,000 of that was work in progress because we hadn't invoiced the customer at the end of March, but we had done 2,000 of the sales. So that needs to be moved into that year so that the sales and the cost of the sales are going to be reflected against each other. So the way that we do that is we have a balance sheet item, and if we're using software, we use a journal to enter this. And so if you imagine normally when you raise an invoice to your customer, you're always, everything that you do that impacts the profit and loss also impacts the balance sheet. So when you raise an invoice to your customer, perhaps that they pay immediately into your bank, and therefore the balance sheet transaction on the other side of that sale is your bank balance increases. Perhaps they don't pay for a little while, perhaps you give them some credit terms, and therefore they will be increasing the debtors. So they'll be increasing the still be increasing the assets in the balance sheet. But in any case, whatever you do, you're always, whatever impacts the profit and loss will impact the balance sheet. Now, when we're creating this work in progress for our part completed job, we're not raising an invoice, so we're not increasing the debtors. The customer's not going to pay us, so we're not increasing the bank account. So therefore, we would create an account or use an account, a pot, if you like, for work in progress. And therefore we would increase the sales accordingly, so £2,000 in the example that I gave, and we would be creating the work in progress for that on the balance sheet. As I mentioned, if you're using software, you would do a journal to create that. So therefore, at the 31st of March, our sales are going to be accurate for the full period, and they're going to be reflective of the costs and the expenses that are against them, and the same in the next year. And we're going to carry that work in progress through. Now, when we come to the new year, so in that scenario, the 31st of March is when we created that income and that work in progress pot, as it were, and we on the balance sheet. On the 1st of April, we're going to reverse that. And because if you imagine, if we didn't do that, we've got this item, this £2,000 work in progress carried forward on the balance sheet, because you'll remember that the profit and loss starts afresh in a new financial year, but the balance sheet carries forward. So if we just left that and didn't do anything different, then when we come to invoice that customer for the £4,000 mid-April, then that whole £4,000 is going to go into that year's profit, and that work in progress is just going to carry on. So sometimes that's how people choose to, if they regularly have work in progress, they just leave the pot, and at the end of the year, they just look at what the balance is and just adjust the difference. But it can be nice and clean and tidy to reverse it, because then you're starting from a sort of a clean page and you know where you are. It's quite easy when you do these adjustments after a few years to lose track of actually where did they come from, and are they still correct. So to reverse the transaction, what we would do is we would take the on the 1st of April, take the balance back out of that work in progress part and take it and reduce the sales in the profit and loss. So on the 1st of April, before we do anything, what we would actually have is no work in progress part, because we've reversed that so that that pot is back to zero. And we'd actually have a negative sales of £2,000 because we've reversed that, so we've reduced the income back down. But then when we invoice our customer in the middle of April for the 4,000, then we would correctly have the 2,000 would be the sales. Obviously, you would have done other things potentially. So, but if you hadn't have done anything else, just to make it nice and clear, to understand the concept of what we're trying to achieve. So if you say, for example, if you've done your year end before you know the exact amount and you've estimated, then this is fine too. It may be then that you've if the invoice was slightly higher than you expected, then obviously slightly more income is going to go into the next year. If it was slightly lower, then slightly more will be left in the previous year, and that's absolutely fine. You don't need to do anything to sort of to correct that. So hopefully, therefore, you can see that if you actually invoiced your customer on a weekly basis and you were paying for your materials on a weekly basis, that actually when you got to the end of March, you would have invoiced your client and paid for your costs right up to that time. So therefore, there's no work in progress. So work in progress is literally things that you've worked on, you've carried out the work, you've incurred costs in that previous financial year, but the invoice is falling into the next year. And of course, you don't want to mess your customer about by sort of deviating from what you've agreed. So that is how we deal with that. You may decide that your work in progress are only small amounts and that you're not going to worry about that, and that is absolutely fine. An important concept to think about is consistency. So what we're trying to do is we're trying to make sure that year on year the sales match the expenditure. So if you imagine, if some years that you account for your work in progress and some years you don't, then that's inconsistency in itself is going to cause disparity when you're comparing year on year. You're going to have artificial inflation and reduction of your profit. So if you start to do that, do it. If you don't do it, then don't do it. And sometimes people can get quite confused about it. It is a confusing topic, and what I will always say is go back to the end result, think about what you're trying to achieve. So you're trying to achieve that your sales and your costs are going to be in the same period. So therefore, if we go back to the scenario that I just talked through, where we had a £4,000 net invoice spread 2 weeks into the previous financial year, 2 into the new year, and we were paying for our cost of sales, our materials weekly. Let's say, for example, that we're paying for those, we're buying those at the end of the week or a week behind. So we only had 1 week's cost in the previous year. Then, of course, we wouldn't want to then account for 2 weeks work in progress because that's not accurately matching the sales to the expenses. So when I say accurately, I'm just saying we're doing our best to make sure that the sales and the expenses that were incurred fall into the same year. So hopefully that is helpful. I know it's a confusing topic. We can break it down more if people have questions on that. Thank you very much for watching. If you haven't already, please do subscribe to the channel. Thank you. Goodbye.